Hello, welcome to our presentation, Paying for Aging in Place. This presentation is brought to you by the Massachusetts chapter of the National Aging in Place Council. For over 16 years, the mission of the NAIPC has been to bring professionals and communities together to champion aging in place through collaboration, education, and accountability. My name is Brandon Campbell, and I will be your host today. I'm the program director for the Massachusetts chapter of the NAIPC. I am also an estate planning and elder law attorney with a practice in Beverly, Massachusetts. Now, many older adults come to a time in their place when they're comfortable in their home. It's their forever home. They want to stay, but for various reasons, it might not be working so well anymore. Maybe they're having trouble paying the mortgage, the insurance, property taxes, and all the other carrying costs. Perhaps there's a lot of stairs and it's just not so easy to get around anymore. I'm very excited today to bring to you two experts on aging in place that can help. Today, we're going to hear from Bonny Gilbert, an expert on reverse mortgages, and we'll also hear from Matt Walsh, an expert on home accessibility options. After you hear from our speakers, we will have an open discussion and address some of the common concerns that people have when they begin to think about paying for aging in place. And at the end of our presentation, we will post the contact information of our speakers if you want to learn more, and I can guarantee that they would love to hear from you. Now, I'd like to introduce our first speaker, Bonny Gilbert. Bonny is a reverse mortgage specialist with Fairway Independent Mortgage in Boston. Her background in both finance and law helps her to work with a wide variety of clients and their advisors to determine whether a reverse mortgage is right for them. So Bonny, why don't you take it away?
Terrific. Hi, everyone. Again, my name is Bonny Gilbert. I am with Fairway Independent Mortgage Corporation, and I am a reverse mortgage lender. So I think we should start at the very beginning. I'm going to spend a little time giving you a very basic overview of how a reverse mortgage works and what it is. And I'm sure that you will have questions after, and I can be contacted, obviously, with the information at the end or through the National Aging in Place Council, and we can talk more all about it. So what is a reverse mortgage? It is exactly that. It is a mortgage. It is a lien on your property. You are not selling your home. You are just taking a mortgage. You might already have a mortgage on your property. You can use a reverse mortgage to refinance that mortgage, or you can even use a reverse mortgage to buy a new home. So it's a mortgage. You're not selling to the bank. You are not giving up ownership. Your children still inherit your property. It's a reverse mortgage. So what does that mean? A reverse mortgage is exactly that. With a traditional mortgage, when you go to the bank and you refinance your home and you take out some of your equity has gone down because you've turned it into cash, and what you owe has gone up, right? And then over time, you are required to make a monthly payment, and you make that payment of principal and interest every month so that what you owe goes down, and your equity, at least in theory, is going back up. And I say in theory only because it's also impacted by market prices, right? All right, so your equity is going up over time and what you owe goes down. Reverse mortgage, reverse. You go to the bank, you come to us, we loan you equity, your equity goes down, and yes, your equity goes down, but you've taken out all this cash, so you owe money. But here's the thing with a reverse mortgage and why it's so important to us as we age. You are never, ever required to make a mortgage payment. Can you? Absolutely. And if you do, and you wish you had the money back because you need it for something else, you can even take all of what you paid in back out. But you are never, ever required to make a payment. And that is so important because it goes to the cash flow that is so important to us as we retire. No matter how big your retirement income is, it's better to keep it for as long as you can, and to it's usually fixed in some way. So we don't want to have big monthly required expenses. Reverse mortgage, no required payment. But what does that mean? It means that the interest is getting added to what you owe, and a small insurance cost is getting added to what you owe. So what you owe over time gets bigger. And so your equity in your property, in theory, is going down. Now, again, property values generally appreciate, so you will have that usually as well, but your equity is going down and the cash that you've taken out is in your pocket instead. All right, so reverse. No payment, so you owe more at the end instead of a traditional mortgage, but it's just a mortgage. Okay, so why is this so important? As I said, it's all about cash flow. And why does this program exist? Because the federal government knows that as we age, cash flow, cash is king. And because there has been such low interest rates for the last 20 years, our retirement funds have not been growing very fast. Our healthcare costs, however, have been going up. Our housing costs have been going up, and we're living longer. So what does that mean? That means that you are not alone if you are concerned about having enough money to last you throughout your retirement, because that is the way it is for at least 50% of seniors, or have concerns about having enough money to last them through their retirement. Federal government knows this. This is not a secret. The federal government has many mortgage programs, VA, USDA, traditional FHA mortgages. So now they also have a program specifically for seniors called the FHA Home Equity Conversion Mortgage, or HECM. It's a reverse mortgage program similar to their other mortgage programs. They do this so that, they do this instead of doubling our Social Security checks or building beautiful, affordable housing for us to all want to sell and move into. It's cheaper for them to have a program that is self-funded, so no taxpayer dollars. Those dollars that you pay into FHA through an insurance premium protects the lender from any losses, and therefore protects you from losses. And therefore, it helps people to stay in their home and have more money, that they have their own money that they have built up in their own home. As a matter of fact, there is about $8 trillion today in the home values, the equity of just seniors, people over 62. So this program is just allowing you to tap into that. So we talked about the big benefit, the cash benefit. You can use this money. There's no restrictions on the money. You can use it for whatever you like, whether it's to change the accommodations in your home, whether it's to buy a summer home, whether it's to help your other family members. There's no restrictions on how you use it. But here are the important qualifications. 1, you have to be at least 62. You have to pay your taxes and your property insurance on time. Okay, and you know what? You have to do that for a traditional mortgage as well. But FHA gets very upset if you don't pay your taxes and insurance. So that is very important. And you have to maintain your property. It has to stay in a safe condition. You don't have to be renovating kitchens, but if your roof is leaking, you got to fix it. All right, so those are the critical qualifications. There's also a financial test, which is much easier than it is for a traditional mortgage, because you don't have to make mortgage payments. So we don't have to check out whether or not you can afford that. We're just checking to make sure you can afford to stay in the home for the long term, right? When does the loan come due? The loan comes due when you have either sold the property. So just like with a regular mortgage, you sell your home, the mortgage that you owe gets paid off at the closing, exactly the same with a reverse mortgage. Or it comes due if you've moved out permanently. So you can only use a reverse mortgage on your primary residence. And that means you live there 6 months and a day out of the year. They don't come and check and see if you're there every single day, but it's got to be your primary residence. And you have to, when you sell, the loan comes due. When you've moved out permanently, let's say you've moved in with your kids or you've had to go into a nursing home, if all the borrowers have moved out of the house, the loan also comes due. Or when you pass away, the home gets inherited, just like it would with any other mortgage. And then the loan comes due and your heirs have the choice of either refinancing or selling the property, keeping whatever capital gain is in there and paying off the mortgage. So that is the basic information when the loan comes due, what you need to do to qualify, how you can use this money for anything that you like, why this program is available, because the federal government recognizes that we need more cash and they're making the money available through your own home, and what a reverse mortgage is. You can make payments, you don't have to make payments. You will have improved your cash flow situation, and you may even have more money available beyond that, because we generally loan about 50% of the market value of your home. So I will just say, sometimes people say to me, oh, my home is worth 600,000. Why aren't they giving me 600,000? No, there has to be room for that loan to grow. You still have the other 50% as equity in your home, right? We loan you 300,000. You don't have to take the whole 300,000. We make it available to you after we paid off any other liens. Okay, so basically a reverse mortgage is to tap into about 50% of the equity in your home. And it's a way to help you stay in your home. And I think that's a good overview. And I'm sure you may have many other questions, and I'd be happy to answer them at another time.
Thanks for that, Bonnie. It's definitely comes up with some of my clients. As you say, when they need that cash flow, it can be a very valuable a tool for them. So next up, I'd like to introduce Matt Walsh of Able Home Accessibility. Matt has been making people's homes accessible for over 25 years. Welcome, Matt.
Thank you, Brandon. So in continuing with the financial background or finances that are the concern of finances with what we do, I do provide stair lifts and ramps and automatic door openers and a few other items. Sometimes they can get pretty expensive. But for the most part, an average ramp and stair lift, let's say in one home, is around $7,000. In other cases, it can get up to about $20,000. So that's a big expense, especially when you're dependent on Social Security and maybe your pension's not as good as it could be. So, so what we try to do, I'm trying to save people money. I always go into a home and do an assessment, and I'm always working with the client's best interest. I'm not trying to upsell anything or sell them something that's more expensive, that's unnecessary. I give them all the options. We don't do any upselling. And another thing that we don't do is we do not offer a maintenance program. A lot of my competition does have a maintenance program. I've seen the rates. They are collecting a yearly rate, which is pretty expensive. And in the long run, they're actually paying twice as much. Let's say they bought a stair lift for $3,000. Within 6 years, they spent $6,000. And yeah, that's how crazy these rates are. But so what we do, another thing that they do is if you don't get the maintenance program, they kind of ignore you. You're neglected somewhat. So we don't do any of that. We install it, and we have warranties on the items that they get. And if they need service, we'll service it, and then we'll charge them a rate. And if something's under warranty, they don't have to pay for the replacement. So we're always looking at that. One of the other things we do is we work with the Veterans Administration, and the VA, if you are qualified, has something to do with an injury or something related to their time in the service. The VA will provide anything that they need, an elevator, a lift, a ramp. We've done some jobs where the vet received about $40,000 worth of equipment, which is pretty amazing. And they didn't have to pay for any of it. So that's good. And you'd be surprised how many vets there are out there that are getting all this. There's quite a few. Let's see. Another thing that we do is we work with the home modification loan program, and that is provided throughout the state. It's a good program. It's kind of similar to what Bonnie does, I guess. They will give you up to $50,000, and you do not have to pay it back until you sell your house. And it's interest free for most people. I've heard from people in the agencies that they said about 90% of the people that apply for this loan get it for interest free. So if you intend on living in your home for the rest of your life, you don't have to pay it back. Once the house is sold, whoever that be, maybe a son or daughter or an heir, would have to pay that loan back. So it'd be a lien there. And what you can do with this loan program is pretty amazing. They're pretty loose as far as what you can do with it. Most of the time when I go to a house and I've seen what they've done, we'll do the stair lift, we'll do the ramp. They'll have a contractor go in there and replace all the flooring in the house. They'll work on structural things in the house, like staircase or beams, or if anything structural needs to be done, they'll put in new outlets. And I think one of the biggest things is the bathroom modification, which is pretty cool. You can get a walk-in tub or a shower without the big edge that you have to step over. Maybe they can modify a toilet to fit you better and sink. So if you're in a wheelchair, you can actually use the bathroom and not have impediments. And it's been great. I've seen many people's lives changed with this. I met a lady that had no money, but she did own her home. And I told her about the program, and she went from being, totally depressed to excited, happy, joyful. So it was great, and she didn't know about it until I told her. So I felt pretty good about the whole deal, Well, that's it. That's pretty much what we do. So if you're ever interested in this, just Google HMLP Massachusetts, and they'll all come up. Every town has their own agency. There's about 6 of them. I work with RCAP Solutions, which is in Central Mass, but there are other ones. And again, it's the Home Modification Loan Program. Thank you.
Great. That's a good thing to know, Matt. I wasn't even aware of that. So now let's just open it up and just have a discussion, and feel free to ask each other questions if you like, jump in wherever. But just to kick it off, I wanted to ask you, Bonnie, on the HECM reverse mortgage program, are there borrowing limits, and how do you navigate that if your home has more value than any limits?
So yes, so FHA loans based on, of course, the market value of your home. And the limit on the market value that they take into consideration is approximately $970,000. If your home is worth more than that, that's fine. You can still get an FHA reverse mortgage. They're just not going to lend you on that greater value. However, there are what are called proprietary reverse mortgages. And all that means is they are provided by private companies, and they will go up to $4 million on the value of the home. However, and they are regulated also by the Division of Banking, and they do follow the FHA guidelines, generally speaking, but they are a little bit different. And I work with those as well. They are definitely available. They are a slightly different animal, but it is still a way to tap into more equity or more money than you would if you were working with FHA, if your home is worth well over $1 million. I find that there's like a break point around $1.25 million, where you still may be better off with the FHA program because of all the other benefits that FHA offers. But once you go over that amount, you are generally better off with the proprietary products.
Great. Matt, I wanted to ask you, so I take it that you don't do the actual loan applications for the people, but you can point them in the right direction.
Yeah, we put them in the right direction. And the people, at least at RCAP Solutions, the company I work with, the agency I work with, have been very good. And they want you to do this, okay? It's not like one of these things where you call them up and say, I'm interested, and they're like, well, I'm too busy, I can't do it. No, they really want you to get this loan program, because the agency, their budget is based on previous performance. So if they have a year, let's say their budget is $500,000,
Mhm.
and they have and 1 year they only did $400,000 worth of loans, the state's going to say, well, that's all you're getting this year. So they're trying to promote themselves. They're trying to grow. So basically, if they don't use it, you're going to lose it. So it's pretty interesting.
So Matt, what falls under the umbrella of a home modification? How broad is that?
You mean as far as what jobs could be performed?
Exactly.
Yeah, so it's a lot of construction. I've seen new porches and decks. I've seen painting, like lots of paint work, like walls, new outlets. It's amazing. It's almost everything, I'm not sure if they do roofs, but I think they'll do windows. Yeah, it's pretty broad.
Okay.
Yeah. So what happens is when you go to apply for the loan, they'll assign someone to your case, and then those people explain everything that can be done. And sometimes they go over budget, which could be a problem. But they got to figure it out.
All right. Bonnie, can you tell us of any personal stories of people that you may have helped with reverse mortgages?
Oh, sure. So should have prepared that, because I really work with a really wide variety of people. Okay, I'm working right now with someone who'll be closing on their mortgage in a couple of weeks, and she is a skilled nurse in a nursing facility, a retirement nursing, a skilled nursing facility, right, nursing home. And she is 72 now, and she would really love to stop working. She owes, though, about $90,000 on her home. She's now getting her Social Security, and she's afraid to stop working completely because she has a mortgage payment every month. So we're going to do the reverse mortgage. We're going to refinance it with the reverse. Her principal and interest payments will stop. So she'll still have to take care of her property taxes and insurance, but that's going to cut her monthly payment by more than half. So I believe the number was she's going to save about $12,000 a year in cash flow. And what that means for her is that if she, because her monthly payment on her principal and interest is about $900 and change a month, right? So what that means is that if she wants to continue to work, she can, or if she wants to go to part-time, she can. But if she wants to stop completely, and she has a very physically demanding job, and so she really does want to either stop completely or pull back, she can. And that's going to make, it's just going to make a huge difference in her lifestyle over the coming years. She lives upstate in a cold environment, and the idea of going out in the dark in winter to work at 72 just gets a little tiring. So that's going to make a major difference for her. I worked with a client who just recently became a widow, and they had a mortgage, and they weren't, of course, people refinance when interest rates were so low, and it's like, okay, great, we'll take advantage of low interest rates, and we'll use the smaller Social Security check, to make the mortgage payments, and we'll basically live on my check, meaning like the bigger check, and that's usually the husband's check. Well, the husband died at 70 unexpectedly. I mean, they were not expecting that at all. And now, yes, she has his bigger check, but she's lost her smaller check. That was the money that was being used for the mortgage payment. So by refinancing into the reverse, she no longer has a mortgage payment. So her, she still owes the money, but we've just refinanced it, no payments. Now she can afford to stay in the home she wanted to stay in. And I will caution that I think it's really important for people to think about, because sometimes you need that second check to qualify for the reverse. So because you do have to have a certain financial income to start, right, in order to stay. And so with that, it really pays to consider getting a reverse mortgage instead of refinancing with a traditional mortgage, so that if one of you passes away, or when one of you passes away, your whole financial picture doesn't change because you've lost a Social Security check and you have a mortgage payment. So that's a piece on that. And then I'm just going to say one other thing. People who don't have a mortgage, we set it up as like a line of credit. So I just was, I closed basically it's called just a line of credit with a guy 66, still working. He and his wife are working, but they have, I think it was about a $700,000 home. The reverse mortgage makes about $350,000 available to him. So they just set it up, and now they've got that line of credit. And if they start to use it, no payments. That money can be drawn at any time. It cannot be frozen. It can't be reduced. And when you don't tap into all of the money on a reverse, the federal government will actually add a little bit more equity to that line every year, at usually a minimum of 3% per year. So if they don't touch it at all for a few years, they'll actually have more money available to them in the future. So there's all these really interesting, the clientele really runs the gamut, and that's what makes my job so fun.
Great. So we're coming near the end of our time, but I wanted to throw one more question to each of you. It's the same question. I'll start with you, Matt. How long does it take to get a home modification loan? And Bonnie, same thing for you. What are the time parameters involved in a reverse mortgage? Matt?
For the HMLP loan, it's usually, you can have everything going maybe in a month, and then you have to wait on all the contractors to do their thing. So I don't know what the deal is now with all these contractors that can't work or whatever, but as far as we go, once I get the first deposit from the loan program, we get everything going. If it's a common item, they could have it in a week. If it's a custom made item, you might be looking at 2 to 3 months. So yeah, it's pretty quick.
That's quick. Bonnie?
The typical reverse mortgage program or loan process takes at least 30 days, probably more like 45. If you're using a reverse to buy a home and you get a verified pre-approval the way you would with a traditional mortgage, we can close in less than 3 weeks if it's a purchase. So, so really very similar to the typical loan process. Excellent.
Well, thank you both again for sharing your vast experience in these areas. This is going to bring our presentation to a close. If you have any additional questions for our presenters today, they would love to hear from you. We are going to post their contact information at the end of this recording, and thanks again for watching.